CNBC-TV18.
So contrary to what the SGX was suggesting, the market started with a flat tick.
1,300 stocks in the green for about 1,400 currently in the red.
Okay, at the day's low, that's the current market situation. 167 points lower on the Nifty, and we have the Bank Nifty, which is putting a lot of pressure right now as well.
It's basically deferred at all-time highs day before yesterday. Yesterday was, a bit of a pullback, bit of a correction, and today we have a follow-up. So this is the question that I was putting out in the morning, whether what we saw yesterday was just a nervous shakeout. The Nifty is down 95 points. And that's 0.4, 0.5%.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Putra, and here are the headlines for the day. Sharp cuts in Dalal Street despite a late recovery. Sensex loses over 370 points. Nifty falls below 18,200. Midcaps fare better than the blue chips. Bharat Petroleum Corporation BPCL unveils a mega capex of over 50,000 crore rupees, mostly on an ethylene cracker and petrochemicals facilities. The stock perks up following this great growth push. Amber Enterprises and Keynes Technology post heady growth in sales and profits, boosting sentiment for electronics manufacturing and services players amid increased global attention on India as a sourcing hub. CreditAccess Grameen rallies in a strong Q4. LIC Housing tanks on weak disbursals. Max Healthcare soars on record revenue and profits, while JSPL falls as it fails to deliver in the fourth quarter. The Supreme Court grants SEBI 3 additional months to complete its probe into allegations made by Hindenburg Research against Adani Group company, extends the deadline till August 14, also directs the expert panel to share its report with all the parties in the case. SEBI had initially sought a 6-month extension. Adani Group stocks closed mixed. And here's the lineup of what we have in store for you. It's a packed show today. In the market opinion, we have Mihir Vora, who's the Director and Chief Investment Officer at Max Life Insurance. In Big Corporate Voices, we have Uday Kumar Hebbar, who's the Managing Director and Chief Executive Officer of CreditAccess Grameen, and Abhay Soi, who's the Chairman and Managing Director of Max Healthcare. Okay, moving on straight to the day's market action. The last street ended in the red, but off intraday lows. Nifty and Sensex saw cuts of over 0.5%. Nifty is now below the 18,200 mark. IT stocks were the biggest laggards, with that index slipping 1% in trade today. Midcaps outperformed the blue chips. That index ended flat with some negative bias today. Prashant Nair is here with all the day's trading highlights. Prashant.
The market has been dithering and failing to take out the all-time highs in a convincing way. That has been the signal for the last couple of days, and that continued today as well. In the morning, we were wondering whether we saw yesterday's sell-off was just a one-day nervous shakeout and it'll reverse quickly, or there is more left in terms of sideways consolidation. We got the answer today. 0.5% cut on both the Nifty and the Bank Nifty is what we had. Although things picked up by close in the last 30 minutes, the Nifty and the Bank Nifty came up quite a bit. Now, broader markets did well. Small cap index was up 0.6%. The mid cap index came back into flat zone and was down 0.25% before we started the last hour of trade at 2:30. Let me just start with the losers on the Nifty first. Kotak Bank was down the most. It was down 2%. Nothing large. Apollo Hospitals lost about 1 3/4. SBI Life, TCS, HCL Tech, Asian Paints were some of the large cap losses that we had. The real story, as has been the case, has been the broader market, although breadth today was negative. And I want to start with losers, and these are some of the big volume-led losers that we had. LIC Housing, on the back of earnings, came under pressure. JSPL, again, earnings-related cut. PVR, Inox, numbers, of course, came out, reacted to yesterday, but today as well. Oberoi Realty, RBL Bank, Devyani reacting to earnings. Adani Total Gas, KEC, Repro India, which has been doing very well over the last couple of days, came under some selling pressure as well. There were gainers as well, and these are the top volume-led ones. Shakti Pumps, from 400 3 days back to 550. It's been a spectacular run. GMDC, Vesuvius India continues its run higher after earnings. IIFL, Wonderla, Max Ventures is back at new all-time highs. So there was enough action on both sides once again. The manufacturing theme stood out. So companies like Keynes, Amber Enterprises, Sirma, which is a relatively newer company in the public markets, did quite well. The question is whether the consolidation sideways will continue. The Nifty's 20-day moving average stands at 18,053, and that's the big support. The Bank Nifty is once again outperformed by a little degree today. Global cues will be very important. They've been flashing amber to red over the last couple of days, and many believe that there perhaps is a leg down which is due in the US specifically. We'll watch how it goes. Back to you.
Okay, Prashant, thank you so much for joining us with that analysis. Let's move on to some market opinion now. Mir Vora, Director and Chief Investment Officer at Max Life Insurance, remains optimistic for a few quarters. He also explains the key growth drivers for NBFCs and banks going ahead.
So I think mixed bag, but going in with a bit of optimism for the next few quarters. Yes, there is some valuation upside in the larger caps, while the mid caps may be a bit more limited. See, for NBFCs as well as for banks, the biggest driver for credit growth in the last many years has been retail, and that trend continues. What had happened in the last, I would say 12 months or 15 months is that because of the tightening cycle, NBFCs had become a bit more, cautious or reluctant to grow fast because of the funding cost going up, while banks continue to do very well.
Okay, that is some expert opinion coming in. Moving on to the second headline now, we have BPCL in focus. It was buzzing after the board approved a mega capex proposal of 50,000 crore rupees. This is mostly on an ethylene cracker and petrochemical facility. So it's a three-part capex that the company has announced. The first one is a big one where they will be investing 49,000 crore rupees, which is the board has approved in yesterday's board meet for ethylene cracker project at their Bina refinery. It will also entail upgradation at Bina refinery. So it's a new stream that they're looking at in terms of petrochemical projects and ethylene cracker here. Additionally, they'll be putting up 250 megawatt of wind power generation project at Bina refinery and Mumbai refinery. The total capex here will be 978 crore rupees, equally split between the two refineries. They will also be setting up storage installations. This is for petroleum oil lubricants and lube oil base stock, and this will be done to store these two products. Here the capex will be 1900 crore rupees. The three big capital expenditure that they've announced, little over 52,000 crore rupees. Now remember, borrowings as on FY22 for BPCL was 66,079 crore rupees. So additional growth phase that BPCL is looking at. They will also be reporting numbers the 22nd of May after HPCL and IOCL reporting good numbers. All eyes are on BPCL now. The stock ended high by 0.7% today. Moving on to the third headline now. Amber Enterprises and Kaynes Technology surged a whopping 14% on the back of strong fourth quarter earnings. Amber Enterprises reported an 81% increase in net profits on a yearly basis. Revenues also came in 55% higher. For Kaynes Tech, net profit at 41 crore rupees doubled on a yearly basis. However, margins declined year-on-year basis. Let's get in my colleague Surbi, who is joining in with all the analysis of these two stocks.
So Amber reported a very strong set of numbers. The revenues were up 55%. The EBITDA was up 62%. It saw a margin expansion of 30 basis points. It came in at 6.8%, and the PAT was up 82%. In their RAC and the component segment, which is 80% of their revenues, there the revenues were up 55%. EBIT was up 54%, and they also added 2 to 3 new customers in this segment. The electronics segment, the revenue was up 69%, and the EBIT was up 62%. The mobility and the motor division, which is just close to 4 to 5% of their revenues, even then the revenues grew anywhere between 31 to 40%. In the mobility division, the EBIT grew 40%, and they have a strong order book of more than 700 crores. In the motor division, their profitability grew 80% on a year-on-year basis. Kaynes Technology, which is a recently listed company in the EMS space, also reported a very strong set of numbers. There, the revenues were up 53%, the EBITDA was up 48%, the margins came in at 16%, and PAT came in at 41 crores. So, very strong numbers from both EMS players.
Oh yes, absolutely. Thank you so much, Surbi, for that analysis. Moving on to some more news. The Cabinet has revised the production-linked incentive outlay for the IT hardware sector. It has doubled it to 17,000 crore rupees. The scheme has a 6-year validity under the revised terms, and total production under the scheme has been estimated at 3.35 lakh crore rupees. Ashwin Kumar joins us with more details on this one. Ashwin, take us through the contours of the scheme.
Well, a huge breakthrough for the IT hardware industry coming in from the policy front. The PLI for IT hardware, which offered incentives of 4 to 2 and 1%, which was notified back in 2021, had received a lukewarm response. The industry had raised concerns about the limited quantum of incentives on offer, about how maybe that is not enough to see a migration from other geographies to India, especially as far as IT hardware is concerned, whether you're speaking of tablets, laptops, PCs, servers. That was the basic function, that was the basic core focus of the PLI scheme. In response to that, we understand that the government has come out and has overhauled this scheme. That was the long-standing demand coming in from the industry. Overhauled to what extent? Well, as far as the incentives on offer is concerned, the budget outlay for the earlier version of the PLI scheme was about 7,300 crore rupees. Now that stands extended to almost 17,000 crore rupees. That's the large jump that we've seen in terms of allocation as far as PLI scheme is concerned. Also, initially, the earlier scheme had a tenure of 4 years. That now stands extended to 6 years. That's not all. With this extended incentive on offer, with that extensive duration on offer, there is a vast change in calculations as far as the total production is concerned. The earlier version, the government had anticipated total production of 1.6 lakh crore rupees. That figure now stands expanded to 3.35 lakh crore rupees. So a major overhaul, this likely to be welcomed by the industry, given as how this has been a long-standing demand, a massive jump in terms of the outlay here by the government for PLI for IT hardware.
Ashman, thank you so much for joining us with those details. Time for a break now, but stay tuned. We'll be back in a jiffy with the other headlines.
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
कुछ फ्रेंड्स ना बिल्कुल फैमिली जैसे होते हैं. मेरा फ्लैटमेट जस्ट लाइक माई मॉम. कपड़े आज धोएगा या अगले साल? हेलमेट. ओए उठा. इसीलिए ना आई गॉट अस एयरटेल का फैमिली प्लान. 2 कनेक्शंस सिर्फ 599 में. मतलब वे बेटर देन अलग अलग रिचार्ज ना. सुन, नाश्ता बनाऊं?
फ्रेंड्स हो या कॉलीग्स, सबके लिए है एयरटेल फैमिली प्लान.
ऑल्सो अवेलेबल फॉर रियल फैमिलीज.
Z-Block Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
RR Kabel presents CNBC Awaaz Real Estate Awards, 14 years of excellence. To nominate, visit realestateawards.co.in or call.
Presented by RR Kabel, associate sponsor RR Parkon.
Burst of colors. Feels like a billion rainbows in my hand.
India's brightest personalities are assembling on one stage, sparking conversations around clean energy. Curated by Network 18's top editors and journalists to chart a path towards a sustainable future. Sia Fest, 17th May, New Delhi, on News 18 Network.
Welcome back. You're still tuned into Markets Today here on CNBC-TV18. Let's track the rest of the headlines that we are tracking for you. The fourth headline now, CreditAccess Grameen rallied over 8% after it reported a 37% quarterly jump in net profits. The company also saw a 14% increase in its net interest margin for the same period. That is the net interest income. Asset quality improved and business momentum is also quite healthy. Abhishek Kothari is here with the key highlights. Abhishek.
While CreditAccess Grameen reported a strong set of numbers, their asset quality improved. Gross NPA ratio was down to 1.21% when compared to 1.71% in the previous quarter. The disbursals growth was strong. 48% quarter-on-quarter was the disbursal growth that you saw in Q4. That meant the AUM growth was also robust at 26.7% YOY and about 18.2% quarter-on-quarter. The customer acquisition was strong. Total number of customers is more than the pre-COVID levels. It is at 42.64 lakh, which grew by more than 8% quarter quarter-on-quarter. So the NII growth was 19% YOY and about 14.5% sequentially, which helped the PAT growth to be robust at more than 86% YOY and about 37.5% sequentially. The net interest margin came in at 8-quarter high of 12.2%. This compares to about 11.9% in the previous quarter. The robust return ratios continue, so the ROA and ROE both have improved both YOY and quarter-on-quarter. Back to you.
Okay, Uday Kumar Hebbar, the Managing Director and Chief Executive Officer of CreditAccess Grameen, says the company saw customer growth of 14 to 15%. He also expects disbursal growth of 20 to 23% in FY24. That is the number that they're expecting there.
The difference is 8 to 10% GLP increase because of the vintage lines and about 14-15% customer growth. And on the long-term basis, our view is that sector also should go between 20-25% for the next 4 years. Maybe beyond this year, microfinance may taper down to maybe 23, 22, 21%, and the non-microfinance will catch up in that space. So overall, still maybe around the same 20-25%. That is what our view, our aim is to grow that way. Close to 20-23%. That is what disbursement we did last year. I think it will go similar fashion because in our case, the disbursement is our loans are little longer term in terms of microfinance also. Almost 29% of our book is 3 years book. Therefore, we don't need to churn the disbursement so far. Therefore, it is little lesser. So last year we disbursed about 17,000 crores. Probably next year it will be about 22,000 crores.
Okay, that stock was in focus today, but Abhishek is back with us. LIC Housing Finance also was in focus. The stock was down 6% despite beating street estimates on the net profit and NII front. Net profit actually came in over 1180 crore rupees versus an estimate of 770 crore rupees. But looks like company saw weak disbursals this quarter with a yearly fall of 17%. Abhishek, tell us more about this one.
For LIC Housing Finance, the disbursals figures were on the lower side. It declined both YOY and quarter-on-quarter for second quarter in a row. Overall disbursals were at 16,027 crore, declining by 17% YOY and about 0.45% sequentially. In this, the individual segment disbursals declined by more than 24% YOY and about 8.65% sequentially. Even in Q3, the individual segment has seen a decline in disbursals by more than 10% YOY and more than 4% sequentially. So the AM growth was a bit on the lower side, coming in at 9.5% YOY and about 2.5% sequentially. The net interest margin was the heartening point to see in the results. It was at 24-quarter high of 2.93%. Operating profits were up 17.5% YOY and about 29% sequentially. The provisions were up YOY, but they declined on a sequential basis given the fact that gross NPA ratio had dipped down to 4.27% when compared to 4.75% in the previous quarter. The ECL provisions that shot up by more than 11% quarter-on-quarter. So in terms of the PNL, both the NII and PAT were a beat on our poll. Back to you.
Okay, all right. That is what's happening as far as numbers are concerned. But one more that we are tracking for you. Max Healthcare shares rallied over 3% after the company reported a strong set of fourth quarter numbers. The company reported highest ever revenue and profits. Abhay Soi, the chairman and managing director of the company, says this is 77% of bed occupancy this quarter. Listen in to what he had to say further on this one.
We've had a 77% occupancy, but we've also opened 100 new beds. So that's about a 3% plus increase in capacity. So it's obviously 77% on a higher sort of this thing. Some of our beds are suboptimally utilized because of institutional business, and we'll be distilling those beds. So I think due to combination of these things, we don't have an issue as far as occupancy is concerned. At least 30% of our beds are catering to institutional business, which is less than 50% of our regular business. So that leaves us our entire free cash flows. It leaves us our ability to leverage. We won't shy away from leveraging up to 2.5 times debt to EBITDA. So that gives us a war chest of $500 million or more without sort of breaching any of those covenants that we've created for ourselves.
Okay, moving on to some more earnings now. JSPL tumbles over 5% after reporting big miss on net profits. The company reported a profit of over 460 crore rupees versus an expectation of 1120 crore rupees. EBITDA was also much lower than street estimates. Let's get in Nigel, who's here with the analysis on the numbers. Nigel.
Well, JSPL's numbers were weak. Going into the numbers itself, the stock was a little bit weakish, but no two ways about it. These numbers are weak. The only positive was the top line was a little bit better because realizations were a little bit better. But otherwise, the benefits of lower coal prices as well as the negative impact of higher iron ore costs, that's what hit them. And that's why there was a miss on the EBITDA as well as on the EBITDA margins itself. A couple of factors played out here. They had an inventory hit, and also the cost of procuring iron ore from Odisha was higher than even NMDC's prices. So that's why they got hit out there. In terms of sales volumes, well, it was lower by around 2% on a year-to-year basis because they had a part shut down at one of their plants, which was unplanned. So that was the problem. Though exports are perking up gradually. Now it's moved to double digits in the past quarter because their export duty has been withdrawn. The EBITDA per ton, the street was working with a number of close to around 12,000 rupees per ton. Well, it missed by more than 1,000 rupees per ton. Now, the profitability as well got hit because of weaker operating profit. Depreciation cost was much higher because of one-time hit in their Australian operations. And also there was an exceptional loss because of write-off in some of their projects. The debt number was more or less constant. And they believe that going ahead as well, the debt number will not balloon up because most of the expansion will be funded via internal accruals itself. Couple of brokerages, Morgan Stanley, they have an underweight rating with a target price of around 460, while Macquarie, they have a neutral rating with a target price of around 557 rupees odd. Back to you.
Thank you, Nigel, for that analysis. In more earnings now, Jubilant Food rallied over 3%. This was despite reporting lower than estimated net profit at over 28 crore for the fourth quarter. Street was expecting profits at around 70 crore rupees. The company also missed street estimates on the margins front. However, revenues met street expectations. Manglam Malu is joining in with the key highlights. Manglam.
Well, as far as Jubilant Foodworks is concerned, the top line was largely in line with street expectations, 1270 crores versus expectations of 1260 odd crores. It's the EBITDA which was lower than estimates. So the EBITDA came in at around 249 crores. The street was working with a number upwards of 260 odd crores. At the bottom line, on a consolidated basis, the company reported a net profit of 28.5 crores. And this was much below expectations. That was on account of a couple of exceptionals. The first exceptional was a 20 crore impairment charge on account of devaluation in the Sri Lankan currency. And secondly, it's weakness in operations in Turkey as well as Russia, which has been accounted for in terms of a loss in their consolidated business. The gross margins of the company quarter on quarter have seen a bit of a dip, even as they stayed stable around that 75% mark year on year. The like-for-like growth in Domino's has come in at a negative 0.6%, and that is something that concerns the street because they've been constantly adding Domino's stores, but in the same stores that they haven't increased or managed to increase consumption. But the positive was that they've expanded their expansion program into Popeyes as well as Hong's. So Popeyes now 13 restaurants, and Hong's Kitchen, which is the Chinese food vertical, also 13 restaurants. The reason why the stock perhaps has recovered is one, because from its all-time high, it's down almost 50%, and from its 52-week high, it's down 30%. And weak as it was, it is still better than its other peer, which is Devyani International. So Devyani, if you just take a look at it, the revenues for the company have grown at 28%. The EBITDA, however, has grown just 8%, as a result of which there has been a sharp margin contraction out there. And while they've added 66 units as well, if you just take a look at the internals in Devyani, which operates across KFC, Pizza Hut and Costa, Costa has been the one which has grown 142%, whereas Pizza Hut has grown just about 16%. Even on an SSSG or same-store sales growth metric, KFC has grown just about 2%. Costa has grown 42% on a very low base and expansion, whereas Pizza Hut has shown a decline of minus 3.2%. So yes, for Jubilant Foodworks, minus 0.6 is bad, but it's not as bad as minus 3.2 coming in from Pizza Hut, and which is what the street likes in Jubilant versus Devyani.
All right. Okay. Thank you so much, Manglam, for joining us with that. To the last headline today, Supreme Court has granted SEBI 3 additional months to complete its probe into allegations made by US-based short seller Hindenburg Research against Adani Group companies. The court has extended the deadline till 14th of August. The market regulator had initially sought an extension of 6 months. Adani Group stocks closed mixed. Ashmit Kumar joins us now. Ashmit, tell us about the key observations in the case.
Well, what SEBI had asked for was a 6-month extension. What they've gotten instead from the top court is a 3-month extension. That's what the apex court takeaway is. The Supreme Court bench, headed by the Chief Justice, took up this matter for hearing. The petitioners were very clear in their stance. They had argued that SEBI's affidavit before the top court made it clear that the Adani investigation began before the Hindenburg revelations, and therefore the findings need to be placed on record. This was a stance that was opposed by the Solicitor General appearing for the SEBI. He pointed out that, number one, there needs to be a distinction made as far as the Adani investigation is concerned. It is confined to possible violations of minimum public shareholding norms. That is something that began in 2020. The 2016 investigation was into the issue of GDR unrelated to Adani group of entities. This was further backed by the apex court as well. The Chief Justice himself observed that, look, as far as this particular case is concerned, they're looking at the Hindenburg violations and not so much at previous investigations. So having said that, the Chief Justice of India observed that given that SEBI has already been allowed 2 months, now a 3-month extension, which effectively allows them 5 months, that should be a sufficient window for SEBI to investigate. SEBI has been asked to come back with its status report by August 14th. That's when the apex court will take a decision on whether or not a further extension is required. And in the interim, the expert committee that has been constituted has been asked to continue to, in fact, expand into other areas and scope of investigation, at least as far as the Adani Hindenburg saga is concerned. Back to you.
Ashma, thank you so much. So that's all we have on this show today, and it's a wrap on this edition of Markets Today. Thank you for watching.